All right. Well, good morning, everyone. We've gotten to 11 o'clock, so I think we'll go ahead and get started here today. A couple housekeeping notes. There is a chat window in the bottom right-hand corner of the screen. I encourage you to send in questions or comments in that at any time, and we'll try to sneak those into the presenter. We'll also, at the conclusion of today's presentation, invite everybody that wants to unmute themselves and ask any questions that they've got there. So. Also, if you want to change the view of the screen, you can do that in the upper right-hand corner of your screen if you want to see only the PowerPoint or put the speaker on the side. And if you make those changes, that's only changing how you are viewing it. So you're not changing it for everyone else. So feel free to move that around however you feel most comfortable viewing that today. So my name is Joel Schumacher. I'm an associate specialist and family and consumer sciences program leader at Montana State University Extension. And I'll be hosting today. And I just want to thank a couple of our sponsors here today that we've got the America's Small Business Development Centers, Montana Department of Commerce and the Small Business Administration, Grow Great Falls, Montana State University Extension, the Montana Economic Developers Association, and the University of Montana are all collaborating to help bring this series to you. Today's presenter is going to be Jason Nitschke. He's with the Great Falls Economic Development Organization there at Grow Great Falls, Montana, and he's going to be telling us a little bit about small business growth in the wake of COVID. And before I turn it over to him, I have one more thing I just wanted to mention, that our January webinar will be on January 7th, and we haven't released our title yet for that, but 11 o'clock on January 7th will be our next monthly session. So with that, Jason, I'll turn it over to you.
Thank you, Joel, and thank you everybody for joining us today, both live and folks who may be watching this on a recording at some point in the future. And like Joel mentioned, if you do have questions, please pop them into the chat box, and we can chat afterwards, after the presentation is over, with some conversation-based questions. As Joel mentioned, this collaborative effort with SBDC, Department of Commerce, the federal agency, the SBA, MSU, the Montana Economic Developers, and my organization, Great Falls Development Authority, is now 4 years in the making. We've been doing the Small Business Webinar Series in partnership with MSU Extension since September of 2017. This is our 12th webinar series presentation of calendar year 2020, and this is our last one. So last couple of years I've wrapped things up in the December one. The MSU Community Extension page, the Small Business Development Center website as well, all have these recordings available, all of the recordings available for all previous presentations. As Joel mentioned, we're going to talk about how to grow a business at this unfortunate COVID pandemic is having meaningful effects on businesses, entrepreneurs, employees, families, children, schools, all of it. And it may sound opportunistic to try to be growing a business. People may say, well, you're growing a business on the back of someone else's failures. In reality, that's probably true. And yet the opportunity for other entrepreneurs to pick up assets, talent, market share, consumers, people need jobs, people are buying stuff, and banks are trying to liquidate assets that have been collected through bank force foreclosures and a variety of other mechanisms as well. It's a tough time. I am a firm believer in my role as a business advisor that being prepared, the Boy Scout motto, is really a way to position yourself to take advantage of opportunities as they are presented. And as the Seneca quote here indicates, that's what we often define as luck. And I put that up there not because, I read Roman philosophy in graduate school. I actually believe that being prepared prior to actually facing an opportunity is the right way to plan strategically for businesses. Well, now I'm trying to move there we go. A bit about myself. My name is Jason Nitschke. I'm a Vice President at Great Falls Development Authority, an economic development organization 501c3 nonprofit serving the Golden Triangle of Montana. My program, the Small Business Development Center program, is a federally funded and accredited resource partner of the U.S. Small Business Administration. Our program here in North Central Montana serves 7 counties: Glacier, Teton, Toole, Pend Oreille, Cascade, Judith Basin, and Fergus counties. Like most entrepreneurs that I engage with, at least, I do not have a business school. I don't have an MBA. I don't have a business degree. I was a journalist by trade, studied political science at UM during my undergraduate program. And then when I was in Hawaii, I surfed a lot and also talked to people and learned about how people give and receive messages. I've been with GFDA in this role as an SBDC advisor for, I'm into my 7th year now. I'm a certified business advisory, certified export counselor, and a variety of other things. I'm also a recovering entrepreneur and come from a family of entrepreneurs. My sister is an entrepreneur and her background is in Spanish. And she's a physical therapist. My grandparents on both sides were entrepreneurs with backgrounds in plumbing and hair cutting. So my experience with entrepreneurs is that oftentimes they are passionate about the thing that they're passionate about. They know a lot about that thing, but may need a little bit of guidance, a little bit of framework, a little bit of directional pointing to be able to help them solve problems and plan strategically. And that is the essence of what Small Business Development Centers advisors do nationwide. SBDCs operate in every square inch of the country, including the U.S. territories. There are 1,000 SBDC centers nationwide, 5,000 business advisors nationwide, including 10 centers in Montana and about 20 advisors nationwide. All of our services are free to you, to businesses. We teach classes and provide technical assistance in that regard. SBDCs are the largest organization of business advisors in the country. So the goals for today, I want to be able to set the stage here for people. When I work with business owners, the first thing I like to do is ask the question, what's the goal? What are we trying to accomplish? Well, my goal for this presentation is to deconstruct a business, create a framework for analysis, and then help you and point business owners in the direction so that they can conduct internal and external research. If my assistance is needed or another advisor comes to the table to help, we're trying to provide a framework and point you in a direction. The question being, well, why are we trying to do that? Why is that the topic of today? Because there are no magic bullets. All businesses are different. All industries are different, regardless of size, regardless of industry, regardless of location. Every business has to address the exact same things: market operations and financials. While there are meaningful differences, cost structure, marketing approach, operational policies and procedures, bookkeeping, there are differences, and yet there are similarities. And the job of an advisor is to deconstruct, create a framework, and then point you in a direction so that you can go out and figure out what that means specifically for your business. If you're going to talk to my father, who is a CPA, he would say that this is accounting. This is the basis of accounting. This is the common language all businesses, all industries have to deal with. So those are the goals. This is the agenda. This is what we're going to talk about. If you boil it down and deconstruct it, really there are 2 ways to grow a business. Those are the financial statements. We'll get into those in a little bit. Those are areas to look in a way to grow your business. We'll talk about some very specific acquisition types. And again, additional areas for you to look, for you to think, for you to research ways to grow your business. And especially we'll be talking specifically in the wake of COVID and some of the challenges that the pandemic has created for business owners and the economy writ large. And then we'll wrap up with some final thoughts and really how to position your business for growth to take advantage of opportunities that may be presented within these acquisition types or others. So let's provide some context here before we get into the content here. The number one concern of any business is a paying customer. If you don't have a paying customer, you don't have a business. You've probably got a hobby. So my goal for people is to create a business, create create solutions to consumer-facing problems. If you can do that, you have built a business that is resilient and adaptive to the needs of a paying customer, which is the number one concern of any business. The other thing when we talk about the number one concern is to then identify the definition of what growth means for you. So very basically, we want to identify, are you trying to attract new customers? Are you trying to retain your existing customers and in essence, squeeze more juice out of the lemon? And if we could have everybody mute, please. I hear feedback in my ear. If we could just have everybody mute. Or are we trying to do some sort of both? And this would be a potential way to grow your business. The next question then becomes when and how. So when is a very critical element of how to grow a business. How you want to grow is going to tie into some of those acquisition types we're going to talk about later. But we need to figure out, as an advisor, I need to know, do you have a short-term opportunity, or is this some element of a longer-term strategic plan? The other thing that I want to have people do research on and become more aware and on top of, frankly, are the macro and microeconomic factors that are affecting your business, affecting the economy at large, affecting others. And I'm going to talk a little bit more about this Wall Street Journal article here in a moment, but really, again, how the microeconomic factors, how are consumers' behaviors changing, how are other businesses, other competitors changing both within your market, within your industry, within your location, within your jurisdiction, and maybe throughout the country and throughout the world. The macro factors, what are the market conditions? And this is kind of where we're coming at with the pandemic-related conversation. There's a Wall Street Journal article that was published in mid-November that the journalist did research on the Paycheck Protection Program, which was kind of one of the two flagship federal bailout programs that were rolled out at the beginning of the pandemic. And the journal analyzed about 13% of the total PPP borrowers, which accounted for a little under 300 companies that received loans from the Paycheck Protection Program, the federally backed loan program. And since August, their findings were that roughly half of those businesses have filed for bankruptcy in the last couple of months. The effect there is 23,000 workers. That's in 45 different companies that those workers have now been displaced and are out of work. So the question then becomes is, what do I do with that as a business owner? How do I use that information? Well, I would argue that if you're looking to grow your business, knowing that other businesses have filed for bankruptcy and have stuff and have employees and have market share, you may be able to target some of your research, prospecting, talent attraction efforts, marketing and promotion into those places. And so then, where are those places where those biggest PPP borrowers who have failed, where are they? Well, if you look, California, Texas, Florida, New York, and Illinois are the 5 most populated states in the country, with 5 of the largest, most densely populated cities in the country, which then makes me wonder, where are those people going? What are they doing? What are their motivations and what inspires those people? I can say anecdotally, a lot of phone calls that I'm receiving are from people who live in the Bay Area, who live in Portland, who live in Seattle, who live in Chicago, who live in New Jersey, who live in Orlando. And guess what they're trying to do? They're trying to get away. They're trying to find new opportunities. They're trying to figure out a new lifestyle. Where are their opportunities if they are financially able to, or if there are employment opportunities? So I put this slide up here from the journal article because it could target your efforts regionally. You could do some marketing and promotion. You could reach out to commercial brokers. You could reach out to employment agencies to try to find employees, staff, and otherwise in those communities. It provides some targeting and some context. And just this last slide that was kind of a scary thing in the journal article. This is the cumulative bankruptcies of those companies that were audited by the journal staff since April. Again, cumulative, not month by month, but this is over time. And you can see that number is really increasing quite substantially since August. The point being, employees are available, assets are available, and market share is available because businesses are closing. So now on to the content. In my mind, when I distill and boil down and deconstruct this issue, where are you, a business owner, going to potentially look for ways to invest in and therefore grow your business? Well, I would argue that the easiest place to look, to start looking, to answer the how question is on your financial statements, two primarily, the income statement and the balance sheet. So then that begs the question, what is on those statements? Well, on the income statement is a representation of customers and volume, which equates to revenue and profit. We can also refer to income statement expenses, and I'll get a little bit more into this here in a second, as investment in human capital as an expense because it shows up on your balance sheet as payroll, salaries, wages, and payroll expenses, which includes benefits. The other area, the balance sheet, and what are you going to look at there? Well, what do you have? How do you pay for it? And what is your contribution as the owner? Assets, liabilities, and net worth. So let's talk about the income statement. And again, trying to identify areas for you, the entrepreneur, to look to identify potential ways to grow your business. So really with the income statement, there are 4 ways to grow the income statement. And yes, I acknowledge that increasing expenses decreases profitability. And yet I also argue that an investment in, for example, human capital would be represented as a salary or wage or payroll expense on your income statement. Yes, that is an expense, but what do those people do for you? Hopefully they do work that generates revenue that grows the top line. If you, as the business owner, are operating at an efficient level, you can then manage, and this is where sales and marketing and management ability overlap. You manage these expenses and these investments to grow your revenue, improve your top and bottom line, and then adjust your variable and fixed costs. Yes, I recognize as we look down these things, more money on the expense side means more expense. And yet I would also argue that those are investments. So if you can go out to the Bay Area where there have been contraction of businesses, statistically we know that's true, and acquire some of those people, relocate them, employ them virtually or remotely, those people hopefully then can generate revenue for you and drive your top line up. So your percentages may stay the same. The dollar amount may go up, but hopefully if you're managing effectively and those people are productive for you, then your business is as profitable as a percentage, hopefully more profitable as a dollar amount. If you're going to try to attract new customers or retain existing customers, and in retaining existing customers, that's a customer service element and a more sales to an upsell feature. More advertising of new product lines, new services, an increase there should also directly correlate to top of mind awareness or return on investment strategies that hopefully then generate more revenue for you. And hopefully if you're operating your business effectively and efficiently, that means more money to the bottom line. So again, just ticking down the items here. What are the things that you could do to consider to grow your business in some form or fashion? Onto the balance sheet, for those who may not be familiar, a balance sheet is what you've got and how you've paid for it. That's the vertical line top to bottom, assets equals liabilities plus net worth. And then the horizontal line between fixed assets and long-term liabilities and current assets and current liabilities is the difference between long-term and short-term. So is there a way for you to increase your current assets by, for example, purchasing more inventory from a distressed supplier, investing or giving terms to a client who pays on receivables and you extend their terms because maybe you're in a cash position that allows you to do that, and then correspondingly retains them as a customer rather than forcing them into some sort of distress that may happen. Of course, the other thing that a lot of food processors are doing throughout, especially big food conglomerates around the country are doing, they're looking to acquire distressed assets in other parts of the country to firm up their supply chain. So the acquisition of land, building, and equipment, those types of activities are things to consider. The intangible assets, again, on the asset side here towards the bottom, goodwill, also known as blue sky, could also be acquired by purchasing another business. The reality here, and I've got an example coming up, the reality here is that the silver tsunami, the baby boomers who are now at retirement age, these entrepreneurs who want to get out, have identified, guess what? COVID's too hard, man. I want out. I want to pull the ripcord, and I'm going to do it somehow. I'm either selling the company, closing the company and walking away and taking all of my stuff to the trash, or I'm going to get what I can get out of it, which does position a business, if you are so inclined and positioned accordingly, to be able to acquire assets, perhaps at a discount, acquire market share at a high quality with an existing track record so that you don't have to recreate the wheel, you're just buying another wheel. So that goodwill, the acquisition of goodwill and tangible assets could be specific to acquisition of market share through a business purchase. So we can also talk about liability diversification. One of the things that I talk to a lot of entrepreneurs about right now is diversification of access to capital. So if you've got one line of credit or one credit card, maybe it's worth talking to your financial advisors about considering addition of access to capital. And I would also say that the time to acquire capital is before you need it, not when the need is imminent. Ultimately, that's going to create time crunch, probably not going to help you. And also, the acquisition of capital prior to needing it would also then suggest that you're prepared and you are positioned strategically to be able to do that. You want to be able to have your loan package ready. You want to have engagement with your bank partners or your financial partners or your investors so that you know, hey, I'm planning, I don't know when, to grow my business, to acquire some assets. I want you to be on my team. Can you help me? What do I need to do? What documents do I need to do? The preparation of the loan package or the investment presentation prior to needing the capital is the best time to do it. And then this is going to be a no-ish, no kidding Sherlock situation. You can always put more money into your business if you have it. You may not have it. You may need to acquire equity. But if your business is not in a cash flow positive position, not in a strong cash position, you may need to consider things like debt coverage ratio, earnings before interest, taxes, depreciation, and amortization. You may need to address net to worth ratios prior to presenting whatever your proposal is to a third party, if the third party is going to help you finance growth through your company. And again, cash is king. Now is not the time to become cash poor. Inventory and assets enable a business to deliver its products and services. And if you can invest in those to then grow your market share, it seems like a relatively wise thing to do if you can do it. And of course, the if is the important thing here. And again, the bottom line here, I would encourage folks to diversify access to capital or be prepared to diversify. Moving on to those kind of three acquisition types that I touched on at the beginning and have kind of sprinkled throughout so far. And Joel, if you wouldn't mind, keep me on time here, would you? I get long-winded. I went 40 minutes on my run through this morning. Acquisition types. What are these things? What do they mean for you? Well, it's going to completely depend. But, and this is me, there's going to be more. This is what I've come to in the last 6 months in engaging with businesses. There are opportunities to acquire market share. There are opportunities to acquire talent, and there are opportunities to acquire assets. By definition, what are those things? We're going to get into some more details here momentarily, and I'll give you an example. Excuse me, I got a runny nose and I don't have Kleenex anywhere around. But there are closures and there is distress within your market space, within your competitive space, within your industry. Guaranteed, no question, there is distress everywhere. The question is who, when, and how for you, if you can. So acquire market share, acquire advertising space, do more marketing, promotion, and sales to acquire more market share, to promote your existing products and services, or pivot into an industry space where you can do more. So then to tie it back to those two sources of financial growth, customers equal revenue, revenue's on the income statement. Advertising is an expense, it's on the income statement. This is what I'm trying to make the linkages here for everyone. Talent acquisition, again, there are people, as that Wall Street Journal article indicated, and then we all have anecdotal evidence to support that as well. There is distress in all industries, not all, but many, that has forced many employees to be laid off, discharged. Maybe some of those folks are undercompensated now or have historically been undercompensated, which could give you an opportunity to acquire those people. Or maybe there's somebody who is underemployed and wants a full-time gig or needs a full-time gig because a spouse, partner, roommate, or otherwise is now unemployed because of something else. And again, salaries equal expenses, those are on the income statement. Again, a starting point to look. How do I grow my business? A place to look, one of these three categories. Asset acquisition, I stepped through that on the balance sheet. There is a good number of asset foreclosures, bank-forced asset foreclosures, auctions. There are also at-risk and watch-listed borrowers that every lender, both traditional and non-traditional, have. So it's worth talking to some people about who those other businesses are and if you can be part of that company's solution. And again, assets are things. Stuff has to be paid for with liabilities, equity, or trade, I suppose, and those things show up on the balance sheet. So an example for you here on market acquisition is a client of mine, Great Falls Gymnastics Academy here in the Great Falls area, as is in their title, a gymnastics coaching company. Huge building downtown, huge building downtown Great Falls. That fisheye image there indicates how large that facility is. It's, I want to say it's 15,000 square feet or something to that somewhere along those lines there. So as soon as the pandemic hit, Brenda Wrigley, the owner of the company, recognized immediate distress in that industry, coaching. Market conditions were immediately impacted. So what she did is start to think about, she just stood there and looked, what do I have? I have this gigantic space. And the first phrase that I heard at the beginning of the pandemic was social distancing. It was before masking. So she thought that she could help people deal with social distancing by utilizing her asset, not stovepiping her business as gymnastics only. So what she did was she said, I have this customer base. They're kids. What else do kids need? Schools are closed right now. Parents need childcare. The economy needs childcare so that parents can go back to work. So what she did was she pivoted into the childcare space. She started with an unlicensed daycare center, a camp model, and she's now a licensed daycare center offering remote learning as well. First phone call I got 3 weeks ago now, when Great Falls Public Schools announced that they were closing, was from Brenda. She said, Jason, you've heard the schools are closing. And she said, I have that remote learning option. Do you want a spot? So she then pivoted into something else. What that ended up doing was enabled her to attract additional customers. It also enabled her to retain her existing customers. And in some cases, she was able to squeeze more juice out of that lemon. So, and it also earned her free media coverage, and some successes came. She acknowledges that things are still difficult because there are spacing limitations and the county health department is still restricting on space. But that's one example of a business that attracted and retained market share by utilizing its assets and acquiring market share. So a couple of other things here, we've touched on these already. Talent acquisition. How would you go about acquiring talent? Well, if you have a competitor or know of somebody every entrepreneur who is an employer who I have ever met has meaningful concern about their employees' livelihoods. So I'm sure many entrepreneurs would be happy to send and direct an employee to you if you are staying open so that that employee's livelihood and their family lifestyle can be maintained. Of course, you can always go after the job service folks, the Department of Labor, other employment listing services, Indeed, and all of that. You can do all of that. You can do targeted marketing. You can use Facebook's, jobs pages and things of that nature. The other thing that I would suggest again is to consider the option of acquiring an existing business that may be ready to move on. Owners are looking to retire. So how would you go about finding a business for sale? Well, I would say start with a commercial real estate broker. They may have a listing. They may have a pocket listing. There are also other online resources for business acquisition, BizBuySell. There are company brokerage firms that do this, Murphy Business Financial. There are a whole bunch of different services available out there. But I would tell you, talk to people you know and ask the questions of qualified people who may be knowledgeable. And I do realize I'm running short on my time here. Asset acquisition, auctions, foreclosed bank assets, at risk or watch listed borrowers. To that end, I would have conversation and dialogue with your loan officer, assuming you've got relationships with one. Ask about their asset division. The first question I asked of a bank partner was, when you foreclose on assets, what do you do? And one bank here in Great Falls said, well, we make referral for a certain industry to paid auctions in Helena. Barn Auctions is another company that's Great Falls based that I have seen liquidate business assets. Moss Companies is a Minnesota based auction firm that is industry specific in some cases. If you're curious, Google it. Highbidmontana.com or whatever, something there. They are it's a very easy website to navigate. These are auctions. And one auctioneer that we spoke with in September said most of these bank foreclosed auctions are going to start hitting it in December and beyond. And many banks are trying to be at the front of the pack so that they can get the most out of an auction or a liquidation. Just an example here of somebody who accomplished successfully talent and asset acquisition. Flawless Auto Body, one of the premier auto body companies in the Great Falls area, engaged with an in-market competitor who was looking to sell, ultimately acquired 3 acres, buildings, the intangible asset of a strong reputation, a strong historic financial performance, a different location away from the proximity of Flawless Auto Body. He acquired 8 employees and a market share. And all of that was plug and play. So he walked right in, didn't have to set up anything, walked right in, and he was in a financial position to pay cash for the purchase. So some final thoughts here. Position yourself for growth. Access to capital is either equity or debt that can be yours or someone else's. Monitor your cash position. If you think that you've got enough cash, stretch that out over a 13-week period and ask yourself the question, what is my project pipeline? What are the trends in the consumer base? Think creatively, talk to a third-party advisor, ask the question. Keep an eye on your competition, know who your sources of information are, and mitigate your risk by making well-informed decisions, by thinking things through, and again, making your decisions based on data, not feelings. My last thought here, if you build a business that is built primarily on solving consumer problems, or potential consumer problems at some point in the future, you then become the shepherd to the solution for that customer. That's the innovation equation by capitalizing on that. Know how strong and weak your business is, and understand what those real threats are. Have a plan, make decisions that are well informed. Work with trusted advisors. Who are your trusted advisors who may be able to step you through any of this? Well, in this case, I would say commercial real estate agents, business brokers, bankers, accountants, insurance agents, attorneys, business advisors of some kind. Those people can help be your independent third parties to help you accomplish your goals. If you're interested in services from the Small Business Administration and in particular the Small Business Development Centers, there's our website. You can also contact us here at Great Falls Development Authority at growgreatfallsmontana.org. If you do have ideas that you would like to share with me or would like to engage me in a conversation, there's my email address. Again, all our services are free. And I do like to think of 2020 as a difficult year that is full of silver linings. So, Joel, with that, do we have questions?
All right. Well, first of all, thank you. I had a couple questions written down, but then you answered them as the presentation went on. We do have, well, first let me point out that Jennifer posted in the chat window the link to that Montana High Bid auction site that Jason had mentioned. And we do have one question that I'll ask, and then I'll open it up for anybody that wants to turn on their microphone and ask additional questions. But the question that did come in is what advice do you have to business owners that are concerned about liquidity with making an additional purchase? So they've got some cash or resources available, but if they make a purchase, then they'll be kind of thin on cash or liquidity. Any advice you're giving to those folks?
Yeah, I would want to know ultimately what things like net to worth and debt coverage ratios are going to be, and ultimately a financial projection that I would never advise somebody to make an investment that doesn't have a corresponding sales, marketing, and management and operational plan behind it. So some break-even analysis on what that asset or what that investment is going to generate for you, that will show and hopefully reduce your uncertainty there. Really making these decisions financially based, and then making the decision based on the proposed financial impact to the degree that you've reduced your uncertainty to a level that you feel comfortable. And if you can't get to a position where you feel comfortable, then sometimes the right answer may be no.
All right, thanks, Jason. Let me pause here. Anybody that wants to is certainly welcome to unmute and ask Jason a question. One more question came in the chat window, and I will, if you're thinking of a question, you'll still have an opportunity here. But with employees relocating from out of state in the Great Falls area, have we seen challenges with housing? And you're on mute at the moment, Jason.
Whoops, I put my elbows down. That's what they tell your parents tell you, don't put your elbows on the table. That's why, because you mute yourself. That's unfortunately not a question I am really qualified to answer. I would think the housing professionals, maybe somebody else on our team might be able to answer that. We do have a talent acquisition specialist. Soren Chargois is her name. One of the other folks on our team, maybe somebody at NeighborWorks Great Falls or NeighborWorks Montana or NeighborWorks America might be able to answer that question. There is a lot of activity, I can say, on the housing side, and some creative land developers who are looking to solve that problem as well. I am always concerned about the definition of affordable housing. Affordable housing, even on my salary, is not affordable. So that is a legitimate concern, and hopefully the answer is yes, but I just don't know the answer. Sorry.
Yeah, my guess is that location probably plays into that with most real estate things too, that it may be community specific, and especially since we have folks spread across the state here, a blanket answer probably is pretty tough there. So I don't see any other questions come in. Let me pause again here to give folks a chance to unmute, and if we don't have any questions, we'll give Jason a few minutes for final comments.
No, really, ultimately, Joel, my point of view is add structure to your decision making and your research. Bring in qualified third-party advisors to help you, and ultimately make a decision that you're comfortable with. Entrepreneurs, you're in the business of taking risks. I am never going to be a person to say you should do this. I am going to be the person who says there is opportunity here if you are positioned accordingly. But being concerned right now is a legitimate issue, And I would err on the side of cash position. And with that said, if you are in a position to grow your business in the short term or in the long term, you should not do it at the expense of increasing the riskiness of failure. Statistics are out there. There are a lot of businesses failing, and I have clients who advanced payment on debt during the pandemic, and now they're cash poor again. So it's a legitimate issue.
All right, thanks, Jason. Let me give one final call here for any questions, either in the chat window or via audio. I also put in the chat window the link to our small business webpage here. So if you do want to go back and watch any of the previous recordings, we do have those all archived there. All right, Jason. Well, I'm not seeing any additional questions, so I'll give you one more chance if you want to make any final comments, and then we'll sign off for the day. All right. Well, thank you everyone for joining us. Mark on your calendars for January 7th, and that will be our next monthly small business webinar. We haven't announced the title yet, but we think it's going to be from our partners over at the University of Montana are going to bring us some content there in January. So have a great holiday season, everyone, and we will see you in January.
Thanks, Joel. Bye, everyone. Happy holidays.